We have a trade alert from Rob Sechan. He joins us now on the phone. Rob, you sold Lululemon.
Happy weekend, everybody. Yes, we did. It's a name that's been on a short leash with our team for a while. We bought it in February, and given the drawdown in the potential tax loss benefits for our clients, given that we've had some good performers in the portfolio this year, it's a high bar to continue to maintain that. I mean, we've had a 12% bounce off the August lows, and so I think we're taking advantage of that most recent move, and we should do that. And technically, we're also bouncing up against resistance a little bit.
All right, so you look at the technicals. What about just the fundamentals of the business? A lot of concern about, what is it, the breeze-through leggings, not popular, just one product,
Yeah.
But at the same time, margins remain strong. That's generally a sign that they're not discounting, maybe just a problem with this one product. So jump and ship just on these near-term things, or do you think there's a longer-term problem?
No, I think, there were some positives, right? You talked about the margin expansion. There was also a management team that's increasingly focused on profitability. They were seeing healthy trends outside the U.S. But ultimately, this is a growth company that continues to be challenged in their core business, which is women's apparel. And I think that some of that's a result of their higher price point, competitive pressures, and as you said, some product quality issues that are eroding the brand power. And it's going to take some time to win these customers back. And I think that's what management is telling us, Frank, with this conservative guidance. But listen, it is still, for the holders on the show that own it, we are taking this from a tax loss standpoint. We think now's the time to do this on that bounce. This is still a high-quality business with strong profitability, and it's at a valuation that we haven't seen since 2008 at 17 times. But that does not offset the tax benefit for us, at least.
All right, Rob Sechan, taking a look at shares of Lulu, down over 0.5%. Thank you for breezing through, Rob Sechan. Good to see you. Thank you very much. Steph, coming over to you. Is this a read on retail, or is it just a Lululemon problem?
It's a Lululemon problem, but it's also a category problem because there's so much competition. Because when you looked at the Nike 10K that recently came out, I mean, they had unit declines in both apparel and footwear. We talk about On and Hoka all the time in the footwear side, but they lost units on the apparel side. And then, of course, you look at Athleta, at Gap. Same-store sales fell 4%. Then you have Fabletics. You have so much, and Viore. You have so much competition on both sides in apparel and footwear, and I just think it's a real challenge right now. I actually didn't think that Lulu was that bad. The women's business certainly was disturbing, but all the other business, they gained market share in men's, and that's the real growth vehicle. I mean, inventories came down, gross margins went up. So I didn't think it was that bad, but I don't think I really want to be in this area at this point because of the competition and the pressure on all the businesses.
So, Brent, coming over to you, you're also making some moves in the retail space as well.
Well, I'm not making any moves, but, I think that this whole narrative around this athleisure, you have these other companies like Alo, Viore, and this is why owning these retail brands are so impossible. Because, I mean, look at even a Restoration Hardware. Just like Lululemon, these stocks are 50% off of their highs. If you saw Dollar General's numbers earlier, it's just, that stock is back at 2018 levels. And so I think as an investor, when you see what's doing well, it's like Walmart making all-time highs, Costco making all-time high. So I just think as an investor, picking athleisure and picking retail, understand these are really hard stocks to own for the long term, because we as the consumer are fickle, and our tastes will change.
Yeah, speaking of, Dollar General shares up 3% right now.